Alrighty, Doc here from North America. Good morning, good afternoon, and good evening. Looks like we got everything set up here. That sounds good. Yep, yes we are. All right, dollar firm today. There's a little concern about the numbers coming out today. Uh, they think that the Federal Reserve may react in a tightening way of some form, or let's put it this way, they'll probably put words together to make it sound like they're tightening. I mean, that's usually the way they function anymore. They don't exactly do things; they just tell people they might do things, and by them talking about doing things, then they might tighten. But all I'm seeing is the stock indices futures move up, and so the beige book at 2 o'clock Eastern Standard Time, or what would that be now? Let's see, so 6 hours from now, 5.5 hours from now. So that alone does it. And at this point, you can see the Swiss moving up in there. You can see the same thing right above it. Let's see if we can do this. Move this down just a little bit more, like so. How's that? There we are. So you can see that. And you can see right there, you can see that moving up very firmly, trying to go for the high of the last 10 days. We'll see what that does there. But that's what we're seeing at the moment. So at the same time, stock indices are rallying. So it's a very strange market as usual. That's why we follow it through quantitative technical analysis and algo. You know, fundamentals can be very deceiving. And in this case here, the fundamental will be is that if the jobs number comes out, which is already out, that's probably why the number is probably low. I haven't even looked. Was getting prepared for the webinar, so that'll be the next adventure. Basically, is trying to figure out what they've done there. All right, so let's go. Let's just double check. Let's see what Dukascopy says about what the numbers look like. Let's put that up there. Let's see if we can do that. It's right on here. News right there. Economic calendar. And let's see. Today's the 2nd. And let's see if we can find the number. U.S. mortgage bankers. U.S. Red Book came out, knocked things down. I think that was earlier. And then Petroleum Institute. No, they're not showing any of that. Okay. So what we'll do is we'll just keep an eye on it, see what the news plays out in the end. And see, where are we at this point? So that's all we see. We see the strength. All right, let's jump over to the euro. Right. There we are. There's the euro. And that's obviously weak also. And I did see that was being pushed into the daily sell this morning also. Or was it confirming? I think it was just being pushed into it. Let's look at it. Yeah. See that right there? It's just breaking down right here. See, it's breaking down right there, and this will join in soon on the J4X. This is, like I said, this is a lagging indicator, but it's a leading indicator as far as I'm concerned when it comes to other public indicators. But it obviously lags my mathematics, but that's good enough because the idea is to have something versus nothing, traders, and that's why we use this. The Dukascopy indicators that we have up on this chart are some of the best out there you can find publicly from any brokerage house whatsoever. So that's the key and the name of the game. And you can see here I don't follow the MACD as much as others do, but I assume just the fact that this is tightening up and flattening out at a high end of the range, it must be something bearish. I would assume that like it did here right before all that. Wow, couldn't even imagine if we saw a 5-point drop on the euro. That would definitely twist some heads, that's for sure. Let's see if we can find out the news. I still wanted to see what the numbers were. Let's see right there. Let's see, there we are. Nothing yet. Fauci seems to be the thing. He seems to have been caught at lying about something or another. I try not to take the guy too serious for the last 15 months, so it's hard for me to take him serious now. And let's see if I can find any news at all what the numbers came out to be for the the numbers this morning, because there's no doubt that there is some action going on here. Let's see what Yahoo Finance says. Tesla now. Stock futures edge higher. Oil extends gains. Well, we'll see what it is in the next few minutes. It'll jump out at us. All right, and so that's where we are with the euro. You can see that pressure on it, and at the same time, we've seen this going on the. You can go over to the fact check spreadsheet over on line 13. We're 1 day in a sell with the cable, and I know it's still lower today than it was yesterday. So, whereas the daily, you can see here 8 weeks in a buy on the euro, and we were 1 day in a buy right there, and it's it's obviously. It does have that look like it's coming towards the end. We start to get that type of thing when we start to get daily sells and or daily buys. Like right here, we had a daily buy last night, and it can't make any money on it at all. And we're in a weekly buy. That's usually the beginning of the end of the action. That usually does show it. Let's see. And then let's take a look at the euro. And see how the euro, the British pound. The British pound is doing the same thing. Like I said, it already came in a daily sell yesterday, and I'm assuming that not assuming. I saw it earlier. It was down, and it's in the weekly buy. And let's put it over here and see where it looks today. See if it's broken the time manifold and showing a little weakness, or is it just this is just a dead cat bounce? Yeah, I can see that. Look at that. It's doing the opposite. It's trying to lift up from the sell, and you can see the weekly doesn't care. Look at that, doesn't care whatsoever. Whereas over on the euro, it's not showing that it cares much either. Look at that, it weakened last week, and now it's trying to bounce up. So this is going to be short-lived. Whatever noise is coming out from the economic news, it may not have much staying power, which is what we've been trying to convene to a lot of people over the last couple of years, is that don't take a lot of this noise too seriously when it comes to financial, the financial news itself, because it's not that good. It's just not that good. Let's see. I'm just trying to look one more place to find out what the numbers were this morning. Wow, this is pretty bad. Nobody's reporting anything. I don't understand what that is all about. All right, let's try here. There we go. Let's see what Bloomberg is saying. Now, Bloomberg is saying, usually that's just a political website that pretends to do financial stuff. Let's see if it, don't see anything there either, no headline. Gains market share, no, nothing, no news out there. All right, but there was 8:30 numbers on, some I guess it's one of the employment numbers, and then on Thursday and Friday we get the big numbers. So we'll just leave it at that. We're not going to worry about that. All right, let's jump over to, let's see, where do we go from here? We go to, let's find a spot. Let's jump over to the Turkish Lira. I saw the news on it last night. It almost hit my dots. I keep on looking at that. Those yellow dots get closer and closer and closer. They gapped the product up, made everybody nervous, and sure enough, that's where we are. And they don't seem to be able to, knock this thing down. President Erdogan, Prime Minister / President Erdogan has definitely put some pressure on these things. There's no doubt about it, and it doesn't seem to be stopping. Every time you turn around, there's something else going on that's putting pressure into this marketplace. Let's see, how's that? There it goes, like that. There we are. Yeah, so I'd imagine you can see the way it's acting. I mean, like yesterday it was trying to go into a sell. It failed at it right here. And you can see right here at this time, it's spiked down dramatically from the gap up. Now let's take a look at it through the euro itself. Right there. Even that is taking the pain. makes all-time highs, and then it rolls over, and that's pretty much what the Turkish Lira has done there. Let's slide over to electric slide to the Canadian. The Canadian really flatlining over the last 3 weeks. Look at that, real flatlining. And I guess if you consider this, making lower highs too at the same time, you know, just a real flat line in the 120s area, the mid 120s. We climbed into, there was a daily buy, still in the daily buy. That's what it comes down to, is we're still in a daily buy, and it's going down in a daily buy, and we're in a weekly sell. So we keep on thinking that the daily buy is going to die, it's going to go into a sell, the thing's going to go down. So far, doesn't seem to be doing it too much, which is surprising. We were thinking that you know, if you noticed on the charts, every time we get into a daily buy, it lasts like 2 or 3 days, and it goes into a sell and it slides down, especially with this weekly sell. In this case here, it's going into the daily buy, and we're 2, 3, 4, 5. Now today is very close. You can see we are 0.000. That's yes, 4 zeros, 3. So 5 digits out, we're still in the plus. That's how tight we get on our atomic or micro level or macro level, or however you want to look at it. That's how tight it is. And so Canadian is kind of dancing. You know, it looks like it's trying, you know, to get back going down in value. It's doing it. It's making lower lows and lower highs. But overall, it's just, you know, since I guess, you know, the beginning of May, it has been just one big sideways action, just a leaky rowboat. You know, just finding a way to go down, but not in any big price appreciation way. Just enough of the weakness, but not enough of the push. So at the same time, we're seeing oil. We'll take a look at it through the euro against the Canadian, but we're seeing oil, you know, marching up and away. These are the pairs trades that we follow that tells us there's strength. Now in this case here, this needs to go down more, the euro against the CAD, to indicate more weakness, or I'm sorry, more strength in the oil. More weakness in this would help us out there, confirming it. But it doesn't really matter, because as I said yesterday, in the end result, it's the chart itself of oil. And looking for all the little hints on the sides is nice and confirming, but it's always nicer to see it in its own environment. In other words, it went into the daily buy right here, went into the daily buy right here, and there's the, see, let's give this a refresh. There we are. Now why is that showing, where's the 28th? Why aren't we seeing the 28th or the 1st? Let's fix that. Something seems a little wacko about that. There we are. That's better. That's probably, that's the 27th. That's the 2nd. Where did the last 2 days go? Let's see what that is. 27th? 28th? Oh! Wait a minute. Where are we at now? This is June, right? And what are we looking at? Okay, this is July contract. Good. Yeah, so it should be updating. All right, let's see what we can do here. It's being very ornery. How about there? Now what in blazes is going on? Let's do a Control R, see if we can get this thing to update. There we go. Okay, that's better. So there is yesterday, there is today, and now it's pushing, yesterday's pushing us down in a sell? That doesn't make any sense. We're going to have to double check there. There's the 28th. There's the 1st. This is not making a lot of sense here. We're just going to have to put this to the side. It's been in a buy, and we'll have to go back and check it. You can see here is strong still, but these two have turned down for some reason. The data just seems to be off. We're going to have to go check that out. Middle age. I read your silver post on, yeah, how about that? We're thinking about putting it in there again on Thursday because it rolled over. I'm going to add more. Oh, no. You got to wait. Oh, it turns green on Friday. Right, exactly. You're waiting. Good. Yes, let's go over to silver while I sit here and try to figure out what is wrong with the data input into the crude oil there. There's silver. Yeah, we were yesterday. I think we can put one up too. Let's see if we can find it. We let's see, where would it be? I guess I can do this. I can go in and I can find a chart from yesterday morning. That's what we want. We want a chart from yesterday morning of silver showing all its potential. You know, and you saw it. It's still sitting on the bar chart story that we posted. And then let's see if I can find it here. So it's in a sense. So if I go into the cent and I go look at the AM yesterday, and we find a silver contract like right there, and then download. Let's see. Yeah, there we go. Here we go. So this is what we saw yesterday morning. Let's see. How do I get this up there? Is it that way? Oh, I think I have to detach it. I have to download it. There we go. Okay. And then there it comes. There we go. All right, this is what we saw yesterday morning when we wrote that. Yesterday morning on Monday, it was flirting with the weekly buy. Beautiful, you know. And it was in a daily buy really nicely. And then by the end of the day, you can see, let's go to it right here. By the end of the day, they pushed it all the way down and pushed it into a daily sell. The weekly rolled back over again, right there, dropping back underneath the zero line. And so that is the wild and willingness of it all at this point in time, which is really, funny to watch go on. And so, yeah, and I said to Robin, I said, if this thing goes right back up again, Thursday of next week, of this week, we put it back out there and say, look what happened. We saw it trying to rally, it rolled over, and now it's coming back again. And we've seen this happen too many times. Silver is that weird like that, like look at this right here, where silver tries to show life, it goes into a buy, it's in a weekly buy here, it jumps up a little bit, and then sure enough, it rolls over, and then what do? You see it's higher again. It's really a central bank thing. It's very strange, hey Alan, how you doing? Doc, I think my first message didn't go through. I wanted to find the research you provide was called Chicago Quant. Yeah, here, I'll show it to you again. No, I didn't see the first message. Let's see, where is it at? Yeah, so that's the gist of it all, I guess you could say. Middle age. It's definitely, that's the gist of it all. There it is, right there. Let's make it smaller so it doesn't look like a giant thing there. See, go like that. Yeah, there we go. And then move it over like so. And then there we are. And then you can see right there, there's the website. So yeah, that was interesting. That was interesting. And Robin's like you. He likes to trade the silver. And he's like, can't this thing, get on its hind legs and run? What's the malfunction there? And like I've said on the webinars here, I really think that the central banks, they play with the metals market dramatically. They use it as a currency. So what I think is going on is that they're stuck with the long gold, and they don't want to be long gold. So what they do is they go short the other two metals, like platinum and silver. And so they're pairs trading the two, So I think that's about the best way to look at it. Oh, good, Alan. Excellent. And so that's exactly that's what the whole story seems to be with this right here, is that the silver action is, it just is what it is. It's just, they just cannot. You can see even when the last time we got into a weekly buy was a really nice move on the upside. It went from 25 to, I think it got to 28, 29, was it 28 and a half. So a $3.50 move, which is pretty impressive for that product, because it has enormous amounts of pressure on it all around it constantly. We need a 28.50 close to get moving, in my opinion. If it wasn't for quantitative easing, I'm right there with you. And how many times have I said that if you asked me in 2005 or 2007 2006, anywhere's around there. Before 2008, if you described what we're living through right now and what we have been living through since 2008 and the collapse of the banking system globally, I would say that we would see silver trading at 100, 90, and I would think that gold could be anywhere from 5,000 to 10,000, and cryptocurrencies would have probably not gotten anywhere near the opportunity that they got into. Now they've made crypto assets, not cryptocurrencies. I don't see them as currencies. They've made crypto assets actually legitimate, solidly legitimate, just because of its technology. Nothing more. When they say it's a pyramid, what's the difference of the pyramid of, any other company with technology? I just don't see it. I'm totally convinced that the cryptos have full 100% legitimacy because of their technology and because of the overstepping of the central banks and the governments. I don't see it any other way, and I don't think you can debate it. I mean, honestly, I'm willing to listen, but I don't see a legitimate debate. I mean, when you look at almost 18 trillion invested in zero return right now, what's that all about? I mean, that's nothing. 18 trillion across the planet is invested in products that will not make their investors any money whatsoever, and they're paying to have their money invested in that. They pay to own those products. Not only do they buy them, they have to pay an interest to own them. That's just an astonishing concept. It's 5,000 years of financial history thrown out the door. So, yeah, I mean, 28.50. Normally, if silver would break 28.50, I'd be like, oh yeah, the money's going to come pouring in. But all the central banks have to do is go and start shorting it again, and they can print money and short it all day long. And that's the unfortunate part right there. Whereas gold, you see, gold has found itself feeling some pressure, but now it's starting to lift. This morning, when I put that red line in there, this was minus. And what is it now? It's minus just 0.06 cents, 4 cents. See it ticking away? Matter of fact, which one is ticking there? Plot 1. Let's do this. Let's make the plot 1 alive on the right side of the chart. So the plot 1 is the histogram. Yeah, so it's the histogram. So we go like this. We check mark that. There we are. We can check mark both of them. See what happens there. The green line is now minus, you can see it, minus 12, minus 20. It's showing the flow of it. Minus 16, minus 24. You can see the movement of it. It's that sensitive. And what's the product of it itself? It's offered at 6. It's offered at 5. It's offered at 5. It's offered at 5 and it's changed. It's offered at 7 now. Now it's offered at 8. So it should go to 12 or something like that. Yep, there's 12. There's 4. Yeah, so it's just literally a center to shake it up, make it wild. There's a whole colony of bears defending a 28.50 close. Oh, I have no doubt. It's the central banks. They're the ones. They're the bears. Yeah, I agree with you. I mean, yeah. Not only are they, a whole colony. Hell, they're literally the government. It's beyond just the rank and file population. It is the government. It is the established authorities. It's literally state-sponsored terrorism. That's what it really comes down to. It is state-sponsored terrorism. Yeah. All right, now let's see, where do we go from here? Look at nat gas. Nat gas has been, that odd gap up. The energy complex is having a real problem. They're buying this stuff. As much as, it's been in a weekly buy, but it's being bought. The idea of natural gas having this much strength, before the winter months, even the summer months, is a question mark. Like, what in blazes is going on? And look at these gaps. Look at the gap that was right here. And now we're having another one of these gaps. There's some desperation out there. Let's see. Oh, hey, Kimbo. Kimbo Mad Slice. I like that. I have two questions. One is, what is your current position? And two, do you work at a bank? Current position, I'm long on U.S. oil. Can you look at that? Oh yeah, and we're getting really weird indications of it this morning. We were green dots, and then data came in and changed it out of nowhere. We are former traders, market traders and traders on the trading floors. We are former members of the exchanges, I was involved in the hedge fund off and on for a bunch of years, and traders on the floor walking around with yellow jackets and green jackets or whatever color jackets, blue, and just doing all that screaming and yelling stuff. And then let's see. So that is our actual position now. And then we write about the markets, and we pontificate about the markets, and we do it here on the webinar every day on the markets. And so we've been in the markets for about 40 some odd years. Between we have a Chicago Quant, we have a market letter, electronic market letter slash, I don't know what you want to call them anymore. Basically, it's a modern day market newsletter in chart form. That's pretty much what we are. And so that's cool. And so we, between myself and my partner in Chicago, we have about 90 years of experience. 90. Where can a dumb novice like me hang out with you wolves? Do you have discarded? No, we don't. No. We call this the electronic trading pit. And here, I'm going to give you a little explanation of it, and you'll love it. And I'll show you our, let's see, where is it at? Let's go find it again, and we'll disconnect it and show you. This is who we are. We're at Dukascopy here. Dukascopy is the only place we broadcast from. And let's see if we can find it. No, not that. I know I'll find it in a second. Where's that? And here it is, right there. Okay, so there we are. And this is who we are, but we're at Dukascopy every day. Right there, you can see that. And that's the website there. But we're here every day to answer questions. We do not prey on the weak. We are traders, so and the end result is that we're hoping not to get eaten by the market. The market preys on all of us in the end result, and that's who we are right there. We're quant trading, for everyone, beginner through advanced. Right there, you can see that, and that's who we are. And so now let's go take a look at the oil, because it's acting really strange, and it's pushing into a daily sell now out of nowhere. Let's see if we can change some of the parameters. I've turned it into an electronic market, so maybe that's what did that. So if we go like this, and we go with the 27 hours, see what it does there, if that straightens it out any. It doesn't really, does it? So there, first, second, okay. So now, what this does is we show you the direction in a weekly basis on the bottom chart. That's what the bottom chart does right there, okay? Let's see, where's the voice sounds right? Let's see, where can a done? This is the one. This is the one. What's that, Alan? This is the one. Okay. So I'll figure out what this is the one is. So what happens? The bottom chart right in here, as you can see, is the weekly chart. It tells us the weekly trend. And so when the white histogram goes plus, and the green line is above the zero line, which they do simultaneously together, it's just a standard deviation of each other. But when that goes plus, it's telling us that the weekly trend now has changed from where it was here, it was on the downside, which didn't last too long at all, and it tells us that it's in an upside. Now, the green lines, let's see, I guess there's a missing red line in here somewhere. So it goes into a sell here, and it's a loser no less. And then it goes back into a buy here. There's a perfect example. We're 8.5 out of 10 accurate. And here is your 1.5 right there. Right there is the 1.5. Okay? And at the end of a move, usually you get this type of stuff too, which is always interesting. And it goes into the daily buy here and goes almost nowhere for about 4 or 5 days. Then it goes into a sell here on a daily basis. This is the daily. The center is the daily. Let's see, where's those? We used to have them marked. They're hidden somewhere. There you go. Weekly quant. Let's go find the daily quant. We have a daily one that says daily quant somewhere along the line. It always disappears somewhere. We'll move this over and we'll put a new one up there for you. And so there's the weekly quant. And then let's copy that. Copy. Okay. And then we'll go here. And this is the daily quant. Paste. And it's DA. Let's make it small A. That's better. Day quant. There we are. We'll make it yellow also. Like that. There we are. And this is the day quant chart. And this is the actual bar chart right up top there. And then we have these green dots and red dots. And what happens is that when it's a green dot and it goes into a daily buy, it's a buy signal. Okay? And then right here, I guess it's trying to push this into a sell right here off of this one by the close. And so when it closes, and it's a red dot, and this is down below, right like that, this puts a red line in there, like so. Then we have a fact check spreadsheet right here that's usually filled in constantly. Sometimes I do it by hand. But in this case here, you can see we screwed up somehow or another, and we didn't get the red line in there. And so it's 1 day and a daily sell now. And that's this column here is the daily sell and the daily buys. It tells you how many days they're in it. And this over here is the weekly buys and the weekly sells, and tells you how many days or how many weeks they're in it. Okay? So we have a fact check spreadsheet right here, basically showing you what we normally have filled in accurate. Once in a while we make a mistake, but overall it's usually accurate in the sense of it's following the charts perfectly. And so then what we have is, today you can see we have the weakness and it's going up in value. Now what we recommend is, if you're not using binaries or options and you're just trading the hard asset itself, the futures or the spot or whatever, then what you want to do is, you're in a weekly buy and now it's jumped into a daily sell. You are in a neutral position, not a bearish position. You can take a profit from this move here if you were long from there. You can take a profit anywhere's in there and always make your money. But in the end result is that, and we can get rid of those dots. We've been watching those dots for like a year and a half. We were waiting for them to break through that. And so that's where we are at the moment. So it's a neutral position. We've been in a bullish position for a couple days, from the, where's it at? Something like the close of 66.05, and we got up to 68.87, and I could have sworn on television I saw someone say that this thing was in the 70s, but maybe they were wrong. And so figures TV, and so that's how you read the charts, and we can go right through that again. So this is a weekly system right here. And when it goes into the weekly buy, you don't take shorts, which are these. You only take the buy signals, like right here or right there. Well, you don't take that sell. You can take a profit off of it, but you don't get short. You can take this buy, but you can't take this short because we're in a weekly buy. Now it closes on the weekly sell last week, goes through it for a couple days, jumps right back into a daily buy, and there's your minus loss. Without a doubt, that is a loss. From this day right there, I guess it is. Let's see, where is it? No, it would be, so it went into the weekly sell off of the 21st, and there is the 21st right there. So this would be the loss you took. Then it puts you in the buy. You cover the loss, You give up some of the profits you've made over in this area here, but not all of it. Nowhere near all of it. Only like 20% of it. And then when we close in a weekly buy, unless you're trading options, of course, then you can be long for the close of this day right here. Is it this day right there? So you would be long from 66.32, and the next day it goes to 68.87. Somewhere's in there, you should be able to figure out how to get a profit out of it. And that's how it all works. It won't let me send the website link to Chicago Quant. Let's see. That's an email address, so you should have no problem. Here, yeah. So that's an email address. So here. I mean, I'll find it. Hold on a second. There it is. Let me just. There it is, right there. Let me fix that. So, did you do the www and all that other stuff, or just go to this? Go to that. Let me see. Let me try that. If I go copy like that, my machine might have muscle memory. So if we go like this and go like that, and you paste it in, there it is. It does it. It sends you right to it. Just paste it in there. I think it does that. Yeah. Yeah, exactly. There it is. So you should have no problem getting there. Oop. Now what is the blazes going on there? All right, that's just. I'm going to minimize that. There you go. Oh no, they're not going to let you do that. They're not going to let you do that. You can't do that. They're not going to let you put it up there. They never do. I wouldn't worry about it. But thank you, Alan. I appreciate it. I appreciate it. So I hope I've answered everybody's question. And who's Kimbo Mad Slice? You're welcome to ask any question you want. We have a policy around here. We say that there are no dumb or stupid questions in trading. There are none. There are only long answers or short answers. That's all there is. That's the only difference. But there are no dumb questions when it comes down to money and trading. There are only short answers or long answers. Okay? And that's what we're here for, is to basically talk about the markets. We all learn when we discuss the markets. Even I learn something once in a while. We all learn something when discussing the markets. So don't be too scared to ask a question. Okay? It's like I said, there are no dumb questions when dealing with money or trading. There are never any dumb questions. Remember, I started on the trading floor, and so there's a problem. There's a lot of stories out there, and they're not very factual, because when Robin and I got involved in trading, we were reactive traders. There's a difference between a reactive trader versus a proactive trader. A proactive trader is someone who is, like in this era, in 2008, not on an exchange floor, not on a trading desk. You have to come up with your own ideas. You have to come up with what vehicle you're using to get long or short. No one is like, hello, I'd like to buy some euros. I mean, no one's banging on your door right now to buy euros or buy the S&Ps. No one's doing that. Okay, so there's a difference between reactive trading and proactive trading. Now, reactive trading, you're buying on the bid, selling on the offer. You're at a desk, or you're at on a trading floor, a bank desk or a fund desk of some form. It's a whole different trading concept. These people don't really make that very clear. So your question is, how many years it took you to become net positive on day trading? I'm passing my second year. Oh, good. And are you making money? That's good. Third now. Excellent. So it's a whole different thing. Whole different game. It depends on what you're trading. If you're trading in an hourly or minute or seconds, are you trading options? Are you trading the hard delta, be it futures or stocks or spot currency? It all comes down to what you're trading, and how how you're trading it. So it's a hard measurement for me to say, was it in the first 10 minutes? Was it in the first 10 days? Depends on what you're trading. When it comes to options, I can be really dangerously good. I am, but I'm not. I'm not negative. That's good. So you're using good discipline, and that's the name of the game. That's why you practice like an athlete. As a trader, you practice like an athlete every day. The guys that play in Premier League in England don't just show up on Wednesdays and Saturdays. They practice all week long. And when they do it in the real game, they're playing in the real game, and they're doing it, dedicatedly. You know what I mean? And so it's the same thing in trading. You use technical tools or whatever your decision-making process is, and you practice it over and over and over again. Exactly, and that we all do that. I do that too. We all do that, and that's how it works. And so as long as you keep on practicing and doing simulations and then doing live trading, when it's time to live trade and then go back to simulations and practice, that's the way the name of the game goes. And that's the best way to train and practice. Just remember, NFL players don't just show up on Sunday to play football, or Saturday, or whatever day they're playing football for the time of the year, or the Thursday night game. They don't just show up one night. They practice for 5 and 6 days every week for the live game. And traders need to do the same exact thing. A pro golfer hits between 500 and 700, maybe even 800 golf balls a day. And then they go out to a golf course and play in competition, Thursday to Sunday or Friday to Sunday. And they're hoping that they only hit, 200 balls, you know what I mean, over the 3-day period. But every day they're out there swinging the stick and hitting the ball. And traders need to do the same thing. And when you think that you don't have to, that's usually when you have problems. Now, option traders are a different bunch altogether, because options and binary traders are dealing with a zero-sum factor and a mathematical game that they're trading. So it's a whole different way of thinking. And like I said, we have about 90 years of experience between Robin and myself. And so we have a lot of interesting concepts. My fear in FX has been expiring options. Well, buy time. First of all, Alan, when you're trading spot, or not trading spot, but trading forex. When you're trading forex, if you're combining together binaries with the spot, it helps out a lot. Also, at the same time, or using options, either one. And so, it's a vehicle. They're all vehicles, and you have to understand. In other words, you don't drive an automobile without car insurance. You don't own a home without house insurance. Okay? You don't have a family without life insurance. So when you're trading your assets, options are the insurance. The binaries are the insurance. And so if you're buying options, just naked long, you're risking more money. And that's okay if you put time on them, like 5 month, 4 month, 6 month, that type of thing. And so if you're using your technical tools and combining the different vehicles that you can use, be it spot or binary or options, or that is the answer to it all in the end result. We can get more in depth. Just ask more questions, and I will try to ferret out better ideas and answers to you. But don't buy something that's only got a week in it. If you're practicing technical analysis every day on products, and you see where you find a window where if you follow this particular signal over the next 3 months, then you're going to, it'll go in that direction. Well, then obviously, then you would be using 5 or 6 month options to do that. You wouldn't be buying 1 week options or 2 week or 2 month options. You would be doing, if your work is telling you that over a 2 or 3 month period it does it, then you'd obviously be buying something that can be, alive by the time your math tells you that it should be alive. You see what I'm saying there? And that's how that usually works. It's all the training. It's the constant training and practicing and investigating, researching. It's a combination of it over and over and over. It never ends. They used to call me, when I was with one hedge fund, the ongoing research project. That's what they used to call me. That was their nickname for me. I mean, they could call me Stinky or, they didn't come up with some nasty thing. They called me the ongoing research project. I remember one time they said, we have a nickname for you. I said, really? What's that? They said, the ongoing research project. I said, yeah, that's pretty true. I'm always researching things. So that is the name of the game there, traders. That's the way it works. All right, where do we go from here? Let's jump over to let's take a look at some of the metals complex. Like we saw gold. There's gold. Gold is still battling its way up, I guess, a little bit there. Trying to move out of the sell. We've got the red dot there at the moment. We'll see how that plays out. How about the copper? There's copper. Copper is holding up pretty good. It's not attacking those 480 area, but you can see it's been in a weekly buy since right here, and that was a good buy right there. That was a nice profit taker there. Another great buy right there. Nice profit taker right there. That was a buy. Now, why isn't the green line in there? We may have shifted contracts, and then the next day it went into a sell right there. Yeah, so that went into the sell right there. And then, let's see, how does that play out? Then you can't take the short there because we're in a weekly buy, so it's a neutral at that point. And that's a loss right there, too, at the same time. After those 2 lovely wins, you give up a little profit there, nothing major. Then it stays in that sell for, I don't know, what is it, a bunch of days, all the way down to here. We're still in the weekly buy. It almost went into the weekly sell right there, but you can see it held up. Look at that. Plot 1 is 0.0016, and plot 4 is 0.0032. And you can see then we go back into the buy right here, and obviously you make your money that you lost right there. So good 4 trades. Out of the 4, 3 are super dupers. And that's how you read the whole system. Let's see. Middle age jumps in good because middle age is a good options trader. I won't buy an option unless it has 4 months of time. Very good. Exactly. And also at the same time, see now middle age, obviously middle age has his own technique, what he uses, what makes his decisions, what confirms the decision making process of to be long or to be short. It sounds like to be or not to be. It sounds like William Shakespeare. But yeah, that's what as a proactive trader, you have to decide that. It's to be or not to be. To be long or not to be long. To be short or not to be short. And what gives you the inclination to do so. Hey George, how you doing? I like what you said the other day about using options to know your loss as an insurance policy. I need to learn that much better. Don't we all? I agree with you 100%. That's the name of the game. Limit your risk and you will be here longer. That's usually the way it always works. Matter of fact, I remember saying this in one of the webinars. I remember being a member of one exchange where it was an equity exchange. And they got to the point where they were thinking that they should sell seats for the week. So you could buy a seat for the week and come down on the trading floor and trade. Put your $50,000 in the trading account and come down and sell the seats for something like like $1,000 or something like that. Something cheap, $500 for the week, and you could come and trade like a broker dealer and have the margin the weasels who came up with this idea, and I do call them weasels, that they were thinking that they could feed off of them. And then I just saw, what made me talk about it was I saw a stat that people that worked on the trading floor lasted, only like 8% of them lasted like 3 months or something like that. And you got to imagine, between Robin and I, we probably have, I was a member all the way up until some crazy number like 2000 or something like that. Someone had left me on a seat, and I had sold my last seat that I owned like in 95 or something like that, 96. You know, for 16 years I had owned a seat or been on a seat, you know. And for Robin it was about the same thing, I guess about 15, 16 years. And so, and then I started dealing with the hedge fund universe from there. We had a hedge fund in Luxembourg, Stonework and I, and Griffin. And then from there it was like, then I was up in Connecticut with Griffin, and then I was with things like Ulysses and Mickey Canner and stuff like that, and then had all the way up into about 2001, 2002, I guess it was. So, you know, it's the you know, the feeding. There are weasels in this industry. There's no doubt about it. They're hungry to take advantage of the weak. Not at this website. We're not interested in that. We're interested in fighting the big battle. That is the marketplace itself. And we see everybody as this is the electronic pit. And like I said, there are no stupid questions when it comes to money and trading. There's only a short answer or a long answer. And when it comes to options, you got to find a way to really incorporate binaries and options into your trading style. You'll be better off for it in the end. You'll be more profitable, without a doubt. So I hope that's all been somewhat insightful, and you can always ask what you don't understand. Ask again. I'm not afraid to answer anything. You know, we're just traders here, just happy to talk about the marketplace, and we have enough experience that we can, you know, give that conversation what it's due. Let's see what silver's doing. Silver's actually trying to perk its head up again. We're trying to get plus for the day. We'll see. We have our doubts, but we'll see. Let's see what else we can take a look at. Here's the stock indices. Here's the S&P 500. Trying to do the same exact thing. Everything seems to want to try to sell a little bit up in here. We'll see. We're at all-time high regions, so it kind of makes things want to roll over. You know, just that alone forces people to want to get out and get into, you know, just take a profit. I mean, if you don't take a profit when you're making money, the next time when you're selling, it's because you're losing money. Remember, if you don't take a profit when you're making money, you don't sell when you're making money, you know, to close, then obviously the next time you're selling is when you're losing money. So the idea is to make money, not lose money. All right, where else are we here? Let's take a look at, anybody want to see any particular products, just yell. We can go back to, like, you know, you want to see what British pound's doing, or you want to see what Canadian's doing, or, you know, whatever, it doesn't matter. We can go back to the same chart again. We're not afraid to look at all kinds of things here. Here's the Russell 2000. Russell's acting extremely well in here. You know, it's pushing hard. I mean, it's not at all-time highs or anything. I mean, all-time highs are, I think that's them right there, right? Yeah, that's it. The all-time highs are in the 2358 area, 55 area, and we're barely just touching the 23 as we speak. You know, so, you know, and you can see it's trying to climb. It's been in a weekly sell from here, and, you know, in this area right here, it went into the weekly sell that week. And so you can see it went down, and now it's climbing back up and making a challenge past that. And at the same time, we are flirting with a weekly buy. It's still early in the week. We'll see how they treat the Russell 2000, which is now pretty much the low cap NASDAQ type of product that we used to have. The NQs, or what Dukascopy and everybody in Europe call it, the Tech 100, which is exactly what it is. This is the Tech 100 or the NASDAQ 100. It's not the NASDAQ composite, it's the NASDAQ 100 or the Tech 100. And it's just chock full of biotechs and tech companies, and, you know, and they've all become, a lot of them have become very legitimate over the decades. At one time it was a junk index. I remember when this thing topped out at like 5,000 in 2000. In the year 2000, 1999, 2000, it topped out at 5,000. It took until something crazy like 2003 or something. It took like 12, 13 years for it to get back to 5,000. While everything else was making all-time highs, this thing was having major problems just getting halfway back. It had fallen down to like 1,500. And now, you can see this thing just rocketing along. And this, let me put it up on Dukascopy just to reinforce the name of it. And right here, let's see, where's it at? Right there. That's what it is. And so now, I mean, you're looking at an index of the 100. It has things like Apple Computer in there. It has Intel, Microsoft, Cisco Systems. It's got Tesla. It's got Amazon. It's got Google. It's got Facebook. It's got all the major modern companies. So it's a real powerhouse now. Matter of fact, 6 of those stocks are now in the Dow Jones Industrial Average. The Dow Jones Industrial Average used to be a index of the New York Stock Exchange for New York listed stocks. They've changed that. 6 of those Dow stocks now are Apple and Microsoft and Intel and Cisco Systems, and who else is in there? There's 2 more of them. One is Amgen, it's a biotech, and I'm trying to think who the other one is. There's another one in there. So, it's pretty impressive. Let's see if I can find it before we end the webinar. It just shows you the evolution of that index, which is pretty damn cool, Not there. Okay, here we go. We're going to give you this right now and go to data, and we'll tell you which stock it is. And right there. All right, so it is, let's see. So Amgen is 1, Apple is 2, Cisco Systems is 3, 3. Intel is 4, Microsoft is 5. Let's see. I know it's in here somewhere. I can't figure out who the 6th one is. I know there's 6 of them. I probably don't realize it. So there's Amgen. Maybe Salesforce.com. I think that might be the next one. Salesforce might be a NASDAQ stock. It could be Salesforce. Yeah. It could be Salesforce. Let me just take a look on Yahoo. I think Salesforce. It could be Salesforce. It might be the 6th one. Salesforce.com. NYQ they call it. No, that's a 3-letter word, so it's CRM, so that's not a NASDAQ stock. I know there's 6 of them in there. One of these are hiding, and it's hiding them there. But anyway, we'll find it out for tomorrow's webinar. We'll search it out. Anyway, this is Doc from North America. We will catch you guys all tomorrow. Good times today. Thank you for asking questions and participating. And thank you, Middle Age, for reinforcing the thing there. I like your saying, we're not here to trade, we're here to make money. Oh God, yeah, that's the objective. I take that as having no position is sometimes the best position. Exactly. How many times? That's exactly it. You can't say it any better, Middle Age. That's exactly it. That's the truth. There's 3 positions. There's long, there's short, and there's neutral. I mean, the idea is to make money. No problem, Alan. No problem. Any questions, come back and hang out. It's the electronic trading pit. Happy trails to you until we all meet again. Happy trails to you, to all our trading friends. This is Doc, the Singing Trader. Catch you tomorrow. Ta-ta for now.